Welcome to the Deep Dive, where we unpack the complex and make it digestible. Today, we're zeroing in on something incredibly pertinent for many of you, the latest earnings from Tata Consultancy Services, or TCS, for the quarter ending June 2025.
Yeah, and our deep dive today isn't just about reciting numbers. It's really about understanding the practical implications, what these earnings mean for you, especially if you're part of an IT team that relies on TCS for services. We're pulling insights directly from their official earnings report and, some detailed analysis to give you the real picture.
Absolutely. We're going to look at the wider landscape, how current market conditions are, well, influencing TCS's business, what their financial health signifies for your projects, and the really transformative role AI is playing in their, and by extension, potentially your operations. So let's get into it. Kicking us off, the sources highlight that TCS, much like other major IT players, is navigating what they call choppy waters. That's due to ongoing macroeconomic uncertainty. And this isn't just corporate speak, right? It's a strategic shift where clients aren't just delaying, they're fundamentally reprioritizing survival over maybe everything else. What does that actually look like on the ground?
Well, what's really telling here is that for the past 3 quarters, overall demand for IT services has been shaky. Quite shaky. Clients are either delaying or outright pausing projects because they're feeling uncertain about their own business outlook. We saw this sentiment echoed recently in Accenture's earnings too, remember. The core insight, I think, is that even really compelling innovation might struggle to find funding if it's not directly tied to immediate cost savings or, de-risking current operations.
And a major underlying trend here, as a direct result of that caution, is clients looking to consolidate their vendors. It's a move towards efficiency, simplicity.
Exactly. And this global macro caution is particularly pronounced in the U.S. and Europe. Clients there are pulling back significantly on discretionary spending. So for your IT team, this means projects that aren't absolutely mission critical might face delays or increased scrutiny. And just getting internal justification for new initiatives, well, that becomes much tougher.
Okay. So given those macroeconomic headwinds and that client caution, the natural next question is, how did this directly translate into TCS's financial performance? The revenue for the quarter came in at $7.42 billion. Now, that's down 1.1% year over year and down 3.1% in constant currency.
That's the revenue side, yeah. But what's kind of impressive is their resilience elsewhere. I mean, their net profit actually marked a 3.5% increase from last year, reaching $1.49 billion. Operating profit was $1.81 billion.
Okay.
And their operating margin held firm at 24.5%, net margin at 20.1%. Plus, their cash conversion was strong. Operating cash flow was $1.7 billion. That's, 100.3% net income. So it indicates remarkable financial stability and really strong operational control, even with those revenue dips.
Right. That said, here's where it gets a bit puzzling, isn't it? Even though they signed deals totaling a strong $9.4 billion in total contract value, that's the total expected over the life of the contracts, up 13.2% year over year.
Yeah.
A lot of those contracts are, as the sources put it, kind of stuck in limbo. Large deal cycles remain elongated.
That's precisely the tension, yeah. While TCS is clearly winning new contracts, North America contributing $4.4 billion, and sectors like BFSI.
Banking, financial services,
Right. And consumer business showing strong growth at $2.5 billion and $1.6 billion, respectively. The actual execution and revenue realization from those deals is slower.
Yeah.
Just slower due to that client caution we talked about.
I see.
So for your team, this could mean new initiatives or expansions with TCS might proceed slower than perhaps you anticipated. Those large deals aren't translating into immediate work. It highlights a backlog of potential that's just sort of waiting for the macroeconomic clouds to clear.
And we also saw some regional variations in their performance, didn't we? India, for instance, had a sharp decline, 21.7% year over year, mainly due to a BSNL ramp down. The UK and continental Europe also saw minor declines, but MEA, APAC, and LATAM regions posted growth. And from a sector view, BFSI and tech services were positive, while communication, media, and life sciences seemed to struggle a bit more. But okay, amidst all these numbers and market shifts, there's one undeniable force reshaping the entire IT services landscape, and that's AI. The sources reveal a really fascinating story here. They indicate that a significant trend in these new deals is the rise of AI. TCS is now embedding AI features into many client contracts.
Yeah, and what's truly intriguing is the primary driver behind clients' interest in AI. It's productivity boosts. TCS is reporting real productivity benefits in areas like developer coding assistance. But the deeper insight here, I think, is that while productivity boost sounds maybe a bit generic, AI is accelerating the shift away from purely bespoke, custom solutions towards highly standardized AI-powered platforms.
Interesting.
So for IT teams, this signals a future where maybe custom development becomes more the exception, and integrating powerful off-the-shelf AI tools is the new norm.
And TCS is clearly doubling down on this. They've already trained over 114,000 employees in advanced AI skills, logging an impressive 15 million learning hours so far this year alone. That's quite something.
It is. And a key takeaway here is the nature of these AI opportunities. Clients aren't just looking for generic AI. They want domain-specific AI solutions. They want modernization of legacy systems using generative AI. And they want enterprise-wide AI centers of excellence, often in partnership with TCS. You know, the work has already moved past just proofs of concepts, POCs.
Right.
It's moved to production-scale deployments delivering tangible value. This isn't just theory anymore. It's actually being implemented now.
And they're even exploring something called agentic AI in sectors like BFSI and manufacturing. Now, agentic AI that goes beyond traditional robotic process automation, RPA, automating repetitive tasks, to systems that can autonomously make decisions and take actions to achieve a goal, truly enabling, as they put it, full process reinvention.
Yeah, and critically for IT teams listening, TCS explicitly states that AI is reshaping roles, not replacing jobs.
That's important.
Very important. And they don't expect AI to reduce hiring overall. That addresses a lot of anxiety in the market, doesn't it? They also mention being open to revenue cannibalization.
Explain that a bit.
Well, it means if AI helps customers save money and optimize, even if it means less traditional revenue for TCS in the short term, they're willing to do it. Which, shows a remarkably long-term, partnership-oriented approach to client relationships.
Okay, let's quickly turn our attention to workforce stability and client dynamics. TCS added 5,090 net new employees. That brings their total headcount to 613,069. Attrition rose slightly to 13.8%, highest in 2 years, but they describe it as remaining stable. And no Q1 wage hikes were rolled out, but apparently they are planned for later in the year.
Right. This indicates a relatively stable workforce overall, which can be reassuring for IT teams relying on consistent talent for ongoing projects. It means you're probably less likely to see critical project personnel churn. That offers a layer of consistency that's pretty invaluable in these volatile times.
Looking at client metrics, TCS showed positive momentum, increases in their $1 million plus, $5 million plus, and $10 million plus client counts year over year.
However, the $100 million plus client count dropped slightly. And that really reflects that continued caution on the mega spends, doesn't it? It just reiterates the point about discretionary spending. While smaller, more tactical engagements aimed at efficiency or specific AI opportunities seem to be growing, those very large strategic projects face more significant headwinds and definitely greater scrutiny. Companies are playing a game of strategic patience, maybe, with their biggest IT budgets.
So let's bring it all together. What does this all mean for you listening and maybe a part of an IT team working with TCS? It's clear that while macroeconomic caution is affecting project starts and, creating delays, TCS itself remains financially stable and is aggressively pivoting towards these AI-driven solutions.
Yeah, and if we place this in the broader context, it suggests your partnership with TCS will increasingly involve discussions around AI-driven productivity gains, modernization efforts, and really how these new service lines can deliver tangible, measurable value. Expect a continued focus on efficiency and perhaps, a slower ramp-up for truly large discretionary initiatives.
This deep dive really highlights a fascinating tension, doesn't it? The push for innovation, especially with AI, versus the current cautious spending environment. It's a dynamic balancing act.
Absolutely. And this begs an important question for you to consider. How quickly can your IT team adapt? How quickly can you start adopting production-scale AI deployments within your own organization? And maybe more fundamentally, how will these evolving AI capabilities redefine your strategic partnership with service providers like TCS in the coming year? Something to think about.